Hey guys, Tiffany Rose here at Guild Mortgage. I'm a top 1% mortgage lender. So I love doing these kind of videos and educating the community. And really, I'm taking all the experience that I've had over the last 20 years and just helping, like I said, educate the community. So today I wanted to cover just for a few minutes, what do underwriters do? So let me tell you, underwriters do a lot. They are, I have to start by saying, they are not here to make us miserable. They're not here to ruin our lives, to help you not get the house. If so, we wouldn't have a mortgage company. Guild would be out of business. We are not in the underwriting world to hurt you. It's to help get you financing, but also to protect the company and make sure that the investor will take the loan, buy the loan, back the loan, whatever the circumstances are. So, a few things. Uh, I'm going to start with the most kind of complicated one is if you're borrowing roughly, depending on what county you're in, state and all of that stuff, $1 million or more roughly, then you have what's called a jumbo loan. Let me tell you about the world of jumbo loans. So there's a matrix we go off of because we have many different investors that we can send the loan to. Now, sometimes the best pricing will be the one that has the most down payment, but you have to have a 2-year landlord history on your tax returns where you claimed rent and put that on your tax returns. You have to have sometimes a 41 to 43% debt to income ratio. You have to have 24 months reserves, which means you have to have in your retirement account, and sometimes 50% of it has to be liquid in reserves, which is your mortgage payment, property taxes, insurance, HOA, and any mortgage insurance, second mortgage, whatever it is, all of that monthly housing expense times 24 months needs to be sitting in an emergency account that's accessible. So all of those kinds of things, me as a loan officer, I go through and I place the loan, but the underwriter is the one that says, you put this in a product that you thought their ratios were 43%, but I got the verification of employment. And this is the underwriter talking. I got the verification of employment, and we can't use bonuses over the last 2 years. We have to use the most recent year to date because it looks like it's declining. They go through and do all of that. It is mind blowing how much the underwriter needs to know. I would not wish their job upon anyone. I give them so much credit. And like I said, they truly are on your side, but they have to go through, they have to know all these details and all of these guidelines, especially if it's a jumbo loan, because they have to dot the I's and cross the T's and make sure that it's packaged perfectly to where an investor can pick it up and say, okay, yes, there's 24 months reserves. Yes, there is a letter of explain for all the different address variances. The credit score meets the criteria. There's a lot of things they have to do, and they have to take. Actually, it's funny because I got one of my friends that just closed a loan. They said, well, why didn't your underwriter just tell my mom to take X amount out of her retirement and pad it in case the income came in lower? Well, the underwriter doesn't give suggestions. They can't say, hey, why don't you tell them to take an extra $500 a month out of their 401k or their IRA in case their bonus comes in low on their current existing job, or maybe their wife isn't retired and they can't make suggestions. They're taking exactly what the loan officer and the processor gave to them, and they're cross comparing it with the underwriting matrix for the exact product. They're not going to suggest what kind of income we need. They're not going to say, well, why don't you do this? Why don't you do that? They're not structuring the loan. They're taking exactly everything that we handed to them and they're check marking the box. And then they issue what's called a conditional approval. And that conditional approval will have things on it saying, hey, all the red flags are cleared, but here's the outstanding items, like maybe the appraisal wasn't in yet at the time of underwrite. And maybe they just need a letter of explanation on something that was on their tax returns, or maybe they see what the business income net is, but they just condition for the K1 from 2020 because we got 2021 and we see that their income is stable. Maybe they'll condition for a profit and loss just to make sure that if you are self-employed, the last 2 years income that was underwritten, they want a quick profit and loss just to show that you're on track because we don't have a tax return for the current year. So lots of things that need to be covered and that need to be maybe explained. So it's a nice, pretty file with a little bow on it. You get the keys to the house, or you get that refinance closed, and the underwriter marks her stamp of approval on it, that the investor is safe to buy it, and that the a homeowner currently qualifies to be and truly qualifies to be in that house and have that home loan. So they are our friends. Be kind, be respectful. Really, my motto is be kind and respectful to anybody. I'm never mean to waitresses, waiters, Uber drivers, anybody, telemarketers. We all have hard jobs. We all have a lot on our plate, and our patience can run thin. But be kind to your underwriters. And if your loan officer watching this, same thing. Just remember, they're not here to ruin our life. They really, really, really. I'm sure it pains them. They really want to make it work, but I'm sure it pains them to almost sign off a loan clear to close and then have to add some conditions because maybe there's a $5,000 large deposit or have another question on more documents that has been provided. So be kind. And the last thing I'll say is I get this question a lot. Why didn't your underwriter know this up front? Or why didn't they ask for this up front? Well, a lot of the times conditions breed conditions. So something that we provide the underwriter with sometimes drums up more questions. And then you'll do a letter of explanation, you as the borrower, home buyer, that will maybe not explain it. So then they have to add conditions. And sometimes it keeps going and going. But if you just breathe and you have a great loan officer like me on your side, then you will get through it. So hopefully that explains it in a nutshell of what underwriters do. Stay tuned for the next video. Thanks.